There's quite the trend going on. I don't know if you've seen it or not, but it's just people just saying they're not paying stuff back. They don't want to pay their debts. They don't want to pay student loans. They don't want to pay back credit cards, and it's kind of funny to me. I guess I'll just jump in and show you. Some of the stuff I get, but it's also just a little bit of entitlement and kind of just criminal behavior. All right, so this one here we have, it says, me eating out with the money I borrowed from one of those apps knowing I'm not paying that shit back. This one is just blatant theft. It's like, and I wonder how much of McDonald's, she's at McDonald's, I wonder how much of McDonald's market share are paid with credit cards that people don't pay back. I bet you it's a lot. Another example of just ignorance. Check this girl out.
These bitches got one more motherfucking time to call my fucking phone. I'm not paying you back, bitch.
What is that?
I'm not paying you back, bitch.
Somebody's trying to collect money from her and she's not paying them back. And they got one more time. What are you going to do? All right, this guy's good. This guy's good. Let's check him out.
So we all talk about general strikes, rent strikes, payment strikes.
I think the strike that he's going to talk about is the strike of cutting his hair. Or the strike of changing his shirt. Or maybe the strike of growing up because he's got a bunch of Pokemon figurines behind him. How old is this guy?
I think this strike we could really be successful at. Student loans. Just don't pay that shit. Next month they come back, don't do it. It's just built into the system. Let it be lost money, like the fucking Pentagon. The Pentagon lost a lot of money. They can't pass an audit to save their fucking life.
This is where it gets complicated for me because I'm with him on that point. Like it is kind of BS that the government just has carte blanche to just do whatever they want with tax dollars and lose money and spend money and print money. So I'm with them there. But being a mortgage lender, you definitely shouldn't just stop paying your student loans. You should definitely pay your student loans. When you're qualifying for a mortgage, student loan debt is looked at as just as high a regard as mortgage debt. And we can argue whether or not that's fair, but the fact is it's just a fact. If you miss a mortgage payment, if you miss a auto loan payment, if you miss a student loan payment, you're probably going to have to wait about a year before you can purchase a home or refinance a home. So especially if you are in a situation right now where you own a house and you've bought it in the last couple of years and you have a little bit of a higher rate, the last thing you want to do is miss a student loan payment and not be able to refinance when rates go down and save money because you wanted to stick it to the man. I'm all for a good movement. I'm all for a good rebellion, but sometimes these videos make it seem like entitlement and make it seem just whiny. It's kind of whiny. Like, ooh, ooh.
I'm not paying back my student loans. I do not care. Oh, but what about your credit score? What am I going to do with a good credit score? Buy a house on starvation wages?
What are starvation wages? Like, what even is that? What is this guy making? He had student loans, so he went to college, and he has a job, and he's talking about starvation, and he doesn't look starving. He doesn't look starving. He looks perfectly plump.
Buy a car I can't afford to insure? I'm not paying.
Auto insurance, isn't it like $50 a month, $100 a month? What's minimum wage? You're just choosing not to work? Work. What's minimum wage? You can't afford car insurance? Use...
Paying them back. I don't give a shit about my credit score. Oh, they're going to garnish your wages. Most of us are underemployed.
What's underemployed? Sounds like one of those made-up words like unhoused, underemployed.
If they start taking additional money out of my paycheck, I just won't work. My life will not get worse. I grew up in a far-right, conservative, hardcore Republican family. And since like kindergarten, I have been conditioned to believe that if I did not go to college, I would not be successful.
It's a lot of buzzwords here. Conditioned, far-right, conservative, underemployed. It seems to me like this guy went to a liberal arts college, got a liberal arts degree, went to a liberal school with government subsidies, which is, let's be honest, it's like a left ideology, a left instrument. College is a left-leaning institution. So the guy used government subsidies to go to a college, and now he's mad at his right-wing parents. Maybe that's the problem. Maybe it's not student loans, bro. Starvation wages. I actually like this guy a lot. This guy makes me happy. It's like he makes me happy like if I see like a puppy stumble into a puddle. Like I don't know why. That's how I feel when I watch this guy.
I'm joining the student debt strike because education should be free.
But why? Why should it be free? A good point. Why should it be free? This guy's an odd fella. Look at him. He looks, I don't know, he might be part AI. But why do you want education to be free? Why should it be free? You can't just say, because education should be free. What else is free that's high quality? Public school system created a lot of these people. So, but then watch this as the paper burns. It reveals his shirt. Watch. So as it burns, this is great videography. It reveals student debt striker. Okay, and this I think this is the last one. This girl is just perfectly.
You fuckers that keep saying, why should my tax dollars pay for other people's student loans? One, go fuck yourself.
Do you know in Native American culture, if somebody didn't pull their weight, they just got rid of them? Because it affected the whole tribe. I mean, when there's 50 people and somebody wants to bitch or complain or not work or not pay their dues, they get kicked out of the society. Oh.
You fuckers that keep saying, why should my tax dollars pay for other people's student loans? One, go fuck yourself.
Yeah, that's so insightful. So insightful.
I'm so sick of Republican viewpoint of, I don't want my tax dollars to pay for blah, blah, blah. What do you want tax dollars to pay for?
This is where it's complicated for me because student loans are freaking, it's a scam. If I, as a mortgage lender, made loans like this, they would be looked at as predatory. I mean, they're interest only. Some of them are negative amortization. Like that's not allowed in mortgages anymore because it was horrible for people. Negative amortization, negative am. I get it. The government doesn't do right with our money. We're in a deficit. They don't pay their bills. I get it. I get all that, but it's just the brattiness of the delivery and like the way of going about it just seems kind of lame, honestly. So I am a mortgage lender, and this is supposed to be a mortgage show, so we'll talk a little bit about mortgages, I guess. So the people are saying that they don't want to pay their debts. They're not going to pay their debts. And then this pops up, and I'm going to read the headline to you, and then I'll share the video with you. So the headline is, Surprising Rise in Mortgage Delinquencies. Here's what to know. Surprising rise in mortgage delinquencies. Let's see what this has to say. So people aren't paying their debts. They don't want to pay their student loans. They don't want to pay they're on TikTok talking about it. And now, surprising rise in mortgage delinquencies. So are people quitting paying their mortgages too?
All right, a new red flag in the housing market, mortgage delinquencies. It's a sign of bigger trouble ahead. That's the question this morning.
That's just not a coherent thought. Was it a question? Was it a statement? Let's listen again.
In the housing market, mortgage delinquencies. It's a sign of bigger trouble ahead. That's the question this morning. Diana Olick joins us right now with more. Diana, good morning.
Good morning, Becky. Yeah, mortgage delinquencies are still historic.
Does this look like the face of somebody? Watch this lady's face when she says good morning. Does this look like the face of somebody who wants you to have a
good morning?
Good morning, Becky. Yeah, mortgage delinquencies are still historically low because home values have gone up so much in the last 5 years. But early this year, they began to rise just on FHA loans, which are generally used by lower income borrowers. But now we're seeing something new. In May, a significant jump in the early stage category of all delinquencies. That's 30 to 59.
She just said a significant jump. She just said a significant jump.
9 days past due, and according to a new report from VantageScore, they rose from 0.92% in April to 1.03% in May. Not huge, again, but an early...
not huge. Significant, not huge. It's like, dare I say, double speak. It's not that big of a deal. It's just a little quick report. I just don't understand it. And these things are brought to my attention because I am in the mortgage industry and I watch this stuff.
Indication of financial stress among borrowers. What's more concerning, though, is that these delinquencies were led by borrowers in the near prime, prime, and super prime segments.
All right. So, like, I see this stuff and I worry, and I'm like, oh no, the mortgage industry is going to crash and housing is going to crash. And their tone is very concerned and the headline is very concerning. So what's the truth? What's the truth with the mortgage delinquencies? Is it a bad thing? Are we in a bad housing market? So there's a couple different ways that you can look at the housing market and say whether it's bad or not. All I know is that paying close attention to this over the last couple of years, it's in my career, 13 years, just got in right after the crash. It's always been kind of like the housing market is a bubble. It's going to crash. We're in 2008 all over again. 2008, this is worse than 2008. They said it when there was a housing shortage about a year ago. They say it now. There are more than 500,000 homes for sale than there are home buyers. So that's going to slow everything down. They said that it was a problem when home prices went up too quickly. They're saying it now that home prices, sellers are adjusting prices down. So is it all doom and gloom? Is it like, are we really in that bad of a situation as far as the housing market is concerned? Well, as far as inventory goes, according to the National Association of Realtors, we're approaching 6 months of supply. Also, according to the National Association of Realtors, they define a balanced and healthy housing market as one with around 5 to 6 months of supply. So we are exactly in a healthy and balanced market. To jump back to the rise in mortgage delinquencies, like, is that a canary in the coal mine? What are the actual numbers? Delinquencies, like, what are the real numbers, and is it a cause for concern? So let's look at this graph real quick. So you can see in 2018 where we were, in 2020 where we were as far as delinquencies go, and you can follow it all along. We're relatively in a good and low spot. But in the height of 2008, 2009, 14% of all mortgages went seriously delinquent and foreclosed. Currently, the national delinquency rate as of April was 3.22%. So extremely low compared to any other to the most recent crash, 2008, 2009. 14% were seriously delinquent, 90 plus days, 14%. Now we're sitting at 3.2% modestly delinquent, like that's 30 days to 60 days. So 1 month or 2 months behind. The Mortgage Broker Association notes that foreclosure starts in 2025 was 0.2% of loans. So remember now, 14% of all mortgages were 90 days late in 2008, 2009 crash and ended up being foreclosed on. So we're sitting at 0.2% of loans. And then 90 plus day lates, serious delinquencies, that's 90 plus days currently, is flat year over year, and it's actually improved seasonally. So knowing the delinquency situation now, 0.2% currently, we're sitting at 0.2% serious delinquencies versus in the crash of 2008, 2009, it was 14%. So knowing that, and knowing that the numbers are basically flat, let's take another look at this video and just, what do we think about it? The just body language, all of it.
In the housing market, mortgage delinquencies. It's a sign of bigger trouble ahead. That's the question this morning. Diana Olick joins us right now with more. Diana, good morning.
Good morning, Becky. Yeah, mortgage delinquencies are still historically low because home values have gone up so much in the last 5 years. But early this year, they began to rise just on FHA loans, which are generally used by lower income borrowers. But now we're seeing something new. In May, a significant jump in the early stage category of all delinquencies. That's 30 to 59 days past.
I'm sorry, but I just have to go back to this real quick. It's like she's making a statement, and then she says after the statement, that is the question. So it's almost like she's like it's like the real news is trying to hook you. It's like an Instagram reel or YouTube short hook, followed by like, that is the question.
It's a sign of bigger delinquencies. It's a sign of bigger trouble ahead. That's the question this morning. Diana Olick joins us right now.
It's a sign of bigger trouble ahead. That's the question this morning. It's raining outside. That's the question this morning. There's a tornado heading toward you. That's the question. You know, you get it? You get what I'm saying? All right. Anyway, so why is this lady on the news so concerned about mortgage delinquencies? Maybe there is a real cause. Maybe we're heading for impending doom, or maybe the news is just trying to keep up with the internet. And people like that realize that they're finite. They're not getting the clicks, and their sponsors, who happen to be Pfizer, probably want people watching the show. So they got to figure it out quick. So mortgage delinquencies are up. That is the question.